Hello, friends. Welcome back. Let's review the trading levels and the rhythm and all things we have discussed. We're keeping it slow and steady. So, we are going to talk about few things. Step one, finding the trend and trend direction, longer term bias. Longer can be a few days or a week. And then pullback entries, the direction to trade, and the target to reverse. We have been talking about all these. Let's get started. Now, what we have on the right side is a Renko chart. They are designed effectively for trend detection, and we are using the oscillator for pullbacks, and we are using same thing on the top as well at the bottom just to show the trend. Since 26, the trend is up. If you look at the VWAP, as we discussed, VWAP 33-day moving average of VWAP 160 and 200-day moving average of VWAP, the trend here was detected to be on the long side. So having said that, trend has not shifted. You are getting rotations. So if you are holding options long term, you're still holding them unless there's a reason to exit. Now, that is part number one. So we know we have uptrend still intact. Second part is the reaction towards the trend to enter the trade. For that, we use measured moves. And we come with multiple measured moves, as you can see here. So all the reaction back and the doubling of it, you can see. So let me just duplicate that, clone it. So this visible scenarios I duplicated, and we can see we are getting impulses back which are vibrating at this frequency. Going back in time, those impulses, let's duplicate it. They're coming from somewhere right here. Let's duplicate further. Right here, let's duplicate further. We can also double them. So you got the idea. We went all the way back. So find those impulses. Find those impulses. So in any kind of market, it is always good to find those impulses, up and down impulses, right? So anti-trend impulses and trend impulses, rotations are always going on in the market. Now we can also go in this direction. Now this is just one of them. There's also bigger impulses because there are multiple time frame participants in the market. Impulses, right? From the pivots. Let's clone it. So that is the work which has to go. It doesn't take much. I'm just doing it in front of you right now. And now these are smaller impulses. Now there could be bigger impulses as well. Right? Because this is obviously a bottoming pattern coming up here. So let's first of all let's see how long these impulses are lasting. They may last you for a few days. I'm just taking the height here, right? So all right, so we track these impulses. We keep on tracking these impulses. Now, if you look at this impulse, we're looking for some kind of pullback. It's not happened yet. If it does, it will come back here, right? So trend is still up. Impulse moves. We are looking for it to come back down a little bit, right? Now I just took one impulse. There's also like smaller impulses here too. Small, small. That is the work which has to happen. So now let's maybe change the color of that, and we just go back and test drive those impulses. Let's change the color. Let's clone it and see if this is coming, showing some value for us to use. Because trading 20, 30, 40 contracts needs a little bit more precision than just trading one ES contract. Game changes, right? We trade 17, 15, 20 contracts to start with. So that is why we need to do a lot more as much we can. So these small impulses, this one we go with the assumption that we are going to follow the market protocol. We are going to follow market. We don't know what it wants to do, but we have come with a methodology where we say the trend, I just defined it, how to define the trend. And if that is a suitable thought process, then you stick with that. Second thing we also discussed was the maximum distance from these moving averages. So let's draw these big ones. And this is also when you're going down, impulse down, right? How far are you gone away from my situation? What is my situation of this 200 and 160 moving average of VWAP? VWAP is available on any platform. Make some changes and you're good to go. And there we go, right? So these impulses, now this one did not work out all the way, but this impulse worked out. So you should not be surprised since we already discussed this very clearly, Renko 36, 1936, and then we also very clearly defined the rules for using the trend definition. Now comes the tactical trading scenarios. Now you mark this and it'll continue to stay here. That's the homework as a professional you have to conduct. Whatever instrument you're trading, levels are there posted until you make your first $1 million free, right? So that's the whole idea. Now, can we time the market? Can we do entire year forecast, multi-year forecast? We can do amazing things with the tools we have. This is the foundation. You have to understand three things first. That we know that there are impulses in the market up and down. There are multiple time frame operators, day traders, and then other time frames could be like, hedge funds, professional traders, insurance companies. A lot of things are happening in the market. So they don't have any interest in doing short-term trading. They're looking for longer swings. But the market vibration, it could be algos going on here, right? We're just measuring the move using Renko. It's very clear that we are getting some location logic sticks, right? So this is going up from this top impulse move. Okay, so this was impulse move long. Yo. Let's see where this came from. Okay, this came from here, this came from here, right? So we track it. So just have a different color for going up, and maybe 2, 3 colors going up, 2, 3 colors going down, large swings, small swings. That's the beauty of Renko, you must understand. Okay, so now, what are we expecting here? Impulse is here. Let's go take the downward move, right? So I'm suspecting that, hey, I think maybe getting a bottom here. Now we have the operational charts right here. at this point, right? Next comes, okay, if I am going to take this, if you have this on your side and this is printed for you every day, you have this, when this print is done to you, you have these labels. I hope you guys can see them, right? Printing enough. Or you have some model on your own, which is fine as well. So these are the labels used by Algo, so I stick with what works, right? So anyway, so now it makes sense that I am going to be going long here. So where is my stop loss? This one, and in this zone itself, where is my stop loss? In this day when I got that intention that I need to go long, right? This is the day I'm talking about. In this box, where is my stop loss if I go here long here, right? It's far away. 30 points for ES is for 20 contracts is too far away, right? Next thing is this one. So if I what I do is I go left. Okay, how about this one? Is this acceptable risk reward 65? How about this guy? 86. Okay, I have something here as well. See these levels? I want to hide behind some level. And this oscillator, operational execution oscillator is ready to go long as well, right? So if you are having trouble with trading ES directly, you can buy one ES future option call at the money or in the money a little bit. It'll cost you $500 and let it play out. Double your money, right? So, but you have to let things work out. But you can only do this when you know we are either trading against the trend or we're trading with the trend and where are my impulses. I don't know why I didn't draw this impulse, but it should be coming in as well. I didn't go that far, that's why. Which is okay. We didn't take this impulse. But we can start taking impulses, right? So there may be 4 or 5 impulses you can track that should hold until the dynamics changes, right? So this impulse, you can just see this impulse, and then maybe bigger impulse, which I showed you the distance between the max stretch, tracking that. So you get some ideas, right? Same thing I'm just showing you here. We had already discussed that earlier as well. So now comes this impulse. Okay, now we are retesting the longer moving averages. Okay, we were here. Let's go here. Trend is still down. You can just see that price is below the 2 moving averages. It comes very close. Now this is very good ideas. It could have gone up or down, but we are taking a risk. This is where we have our oscillators telling us also there's a high probability that we can probably stop here. And now this is our levels also, blue levels. So this is where when I say go long or short, if you're doing your analysis properly, right? If you don't have all this, let's try putting MACD. So I don't use any indicators because we are trained differently in professional environment. Okay, so here MACD is not doing much. Okay, now maybe you're not like MACD. Maybe I don't know what's going on out there. There are 300 indicators out there. So let's see, maybe we can use stochastic. Rock A. It went somewhere. Maybe let's try something else. Maybe let's try stochastic slow and fast. Okay, this is fast, this is slow, this is overbought, oversold, right? So overbought can be overbought for a long time, oversold can be oversold for a long time. These problems are already solved by this oscillator, right? But ultimately, we have a condition that we want to go short. We have a condition on the operational oscillator also to go short, right? And if you don't know the impulse, if you are not doing your homework and you show up to make money, you will get burned badly. So better spend time on mastering all these things so your mind can be just doing this in your sleep, what I'm doing. There's nothing difficult about what I'm showing you. We haven't even discussed professional way of coaching and trading. We're just discussing very basics, right? All right. So stretch is here. We already discussed that, right? Same thing, stretch is going and reversing here. You can just see it. You just have to do it. Just have to draw the boxes, draw this up and down impulses. All right. So here, intention is to go down, trend is down, pull back to the VWAP. What are you going to do? Well, if you don't know, these levels are posted. I try to post it after market close, 7, 8 o'clock. But this is the way they are published when the cash resets. So what are you going to do here, right? Go long or short. If the intention is that the impulse is already here, it may have come from some other place in the bottom. We can find it if you like, but you got the idea, right? So what goes up, goes down, same impulse, reversed. All right. So what we are going to do in this case is we are going to describe if you're trading the future to go short. So short one tick below this. Now this time you have to probably try one time or two times. If you get what this is like, again, this is Renko chart, right? Each bar is quite a large in height. We are trying to suppress the noise. So this is a stop loss. This is a profit, and always go 1 to 3. So what we do is let's take this bar 1, 2, 3, 4, 5. This is 1 to 5. Lose 1 to make 5. Lose 1 to make 5. So here, lose 1 to make 5. Go short here, you lost 1. No problems. Try again. Lose 1 to make 5. Here you made 5. Net 4. Right? This is how you do it. It's right here. Sorry. Right here and right here. Or you can also buy one ES future put. It'll cost you around $500 to $700 range. And this will double your money in 24 hours. But that can only happen if you have a bigger bias and impulses going with or in your direction and your research, right? All right, so why did it stop here? I understand we have green levels, right? Green levels, green levels. Now, there's some science going on behind this, very complicated algos, but if you don't have that, you have these impulses. Right now, the impulses come, and these levels are printed for you. So what you can do is you can reverse your trade, right? This lasts for hours and hours, 6, 7 hours move. This is how you should start first before you start putting 20, 30 contracts per day on ES futures. First, get your mind working correctly in terms of the locations. This is just the direction to trade. Now here, the direction has flipped that we will be taking long. Right? If you're doing the homework and you're smart, this don't have to wait for the blue levels. These levels are already there. You can just take a long here itself, right? Future itself also. But these are the extreme levels which you have to wait for. Or you buy one call future option for $500 within 24 hours. You double or triple your money, in this case 100 points, right? If you take large swings. If not, you come here, you already want to go long, let this guy come down to the blue levels. Now what are you going to do? Simply take 1 to 4. You try one time, stopped out. The second time it goes, right? So algos are collecting contracts here. This is no trade zone. So we have to wait for this to exit on one side. Now I'm giving you an idea which side is probability a better side to take based on the impulses on the higher time frame. Ranko. Now, where were we? We were here, we were here. Now we are back here. Wait for this guy to height to reach. It is there. I want to take shot here, which is also our profit target, interestingly. The market goes down, comes back. And where is it going to go? It's going to go down. Now you know why. Now we know why. And we get 1 to 4, 1 to 5. So I hope this helps. And I'm going to keep banging on this because doing 100 things won't do anything for you. Start with this. Now, intraday trading needs profiling techniques, looking inside the bar techniques, contract management techniques. That requires 3 to 6 months of private review of your trades every day, right? Once a week at least. So this is how it is done. I hope this helps, maybe put some more light towards your intentions. And then not to forget, we also have, remember, these balance points. Market is going up and down. You can do trend lines through them, as we discussed earlier. So when it crosses below this, middle of that cross, I'm going to draw the line. I don't know what's going to happen. When it gets there, then I already have done my homework on the right side. And I've done my homework on the left side. This is a cross. So I'll go right in the middle and punch the line through. And then I'll keep doing this from the low. So this is a low. This is also interesting low, right? So we don't know. So here, I can't cross this. It's going to go vertical. So I'm going to cross. This is also going vertical. So I'm going to cross this one. I'll just draw it. Here it crossed, right? Just draw it. They will all be revisited as time progresses. Then this is again a cross. I'll project it right there, right? You project it here, marking this here. You look at this where it went. Boom. Now I have 3 green levels right there. And this is where you got a profit. And also, look at this guy, right? So this guy is also, we are reaching the height. Now this is a loss of momentum also, but don't have to worry about it. So trend is still up. We're still getting some reactions against the trend. Now this one is this reactions. This is a pullback. When trend went up very fast, it came back and pulled at the impulse level, and trend is still up, pull back. This is overbought here, and it became oversold, and that means it has released some pressure at the impulse level. We can go long. We already know long, right? So you cannot take a long here. So at this level, what you can do, now we are saying long only here, right? So, okay, if you feel this is too much stretched out, you have to wait for the pullback. You wait for the pullback, and then you take the direction of the longer trend. Then you obviously have to wait for some oscillator at your side to set up the stage. Then you ignore going shorts. So this level is printed, ignore the short and just try the long side only. Now this day was just a break even most likely, because if you tried one time, lost it, second time, lost it, third time, you got your recovery, maybe made 1 to 1. This is your stop loss. This is your loss range. Here is your loss range, 4 point. So you lost 4.8 points and it went from 15 to 30. So you still made 5 points, right? So this is how potentially things can be dealt with. Okay, and now, so we're discussing larger trend, pullbacks, impulses, the direction to trade, and then passing the lines where the targets are for reversal. They'll also match up your you can also slow down your trading with the at the extreme impulses. You can uh, deal with options, future option as well, but understand the instrument. They expire once a day. You can have 1 day out, 2 day out. A lot of work has to be done on your own on those subject matter, right? All right, so this is again impulse we passed. We can just pass this also, right? So we can do some hedged trading, which is what I do personally. Uh, so we are hedged here, and we are taking a bias in a certain direction with the hedged possibility, right? And then if it reverts here, we will release the hedge and we'll make a decision. At this point, where are we? We are here, right? So keep finding those impulses, keep finding the trend. First is always the trend direction. I given you a model of trend direction if you like it. It may not be perfect. I mean, this, if you look at this, this looks like a downtrend. But if you zoom out, now what? See this? It has been going long since this. So that is how you have to put some. This is acting as a multi-high time frame controlling chart, and the left side is execution chart. I hope this helps. Thank you so much.